How's it going, everybody? Good to be back. Ed Ponsi here, your FX educator, here on behalf of FX Street. Once again, great to be here. S&P futures are up about 4 points here in the early going. Oil is a little bit lower. Here in the U.S., just taking a quick peek here at oil. Actually, oil's kind of flat here. And just taking a quick peek at dollar CAD. Dollar CAD's a little bit lower. Hey, will we get a third shot at dollar CAD? It's a good question. We actually had 2 winning trades on dollar CAD last week. I hate to keep going to the well on dollar CAD, but you know, if it's hard to fight what's working. And also, the ATRs are so low on so many of the pairs right now that, you know, some of the pairs I'm really kind of reluctant to even go after with the very low ATRs. But here's ATR of 77 on dollar CAD. Compare that to New Zealand US dollar 47. Man, I mean, 47 pips, you know, per day. 46 per day on Aussie. That makes 77 looks positively volatile by comparison. Here's pound yen, which is usually one of the most volatile pairs out there. Only 114 pips per day. It's a very nice looking trend, though. Let's pull up the moving averages. There's the 10. Oh, you got a lot of activity on the 10 recently. A couple of nice hits right off the 10. So I would probably give this a chance. 10-day moving average is currently 137.05. The price is 136.25, so it's about 80 pips away. So 80 pips is pretty far, but not for this pair. This pair can move, look, right now it's moving 114 a day. That's very low for this pair as far as volatility. Pound yen very frequently moves 200, 300 a day. And it's the kind of pair that, like, when you blink, right, it goes 25 pips and you're like, whoa. Of course, it hasn't been that way recently. But this is exactly what I'm talking about. And the yen is the king right now. This is why we keep going back to the yen pairs. The yen is the strongest thing out there, so I'm prone to want to buy the strongest thing out there. This is what a trend trader does. They want to buy the strongest thing out there. Human nature would be to do the opposite. Is to say, well, this has already gone far enough, so I'm going to say this has dropped so far that I'm going to buy it, and it has to reverse at some point. And at some point that'll be right. But just imagine anywhere you had bought this recently, you know, yeah, you might have made money on it, but what keeps happening? It keeps going lower, and that's telling you there's something fundamentally driving the direction here. There's something fundamental driving this down. It's when the technicals form that pattern, there's something fundamental behind the technicals. This is why we don't ignore fundamentals, because fundamentals and technicals are not unrelated. They're two different sides of the same coin, is one way to phrase that. So if would I simply put a sell order in order to sell short right on that moving average? Well, that you have to be careful with that because moving averages move, right? So I might put it a little bit above that moving average, because if the price were to come up there today, it would push that. This is a 10-period exponential moving average. It's a daily chart, so it's a 10-day exponential moving average. If the price were to move up, it would push that moving average up a little bit. So if you really wanted to be precise, you'd probably place that buy order a little bit higher than the current location of the 10-day exponential moving average. Because if that order were to execute today, that moving average would not be located where it is right now. It would be a little bit higher if it were to execute today. The other thing to consider is this. If it doesn't execute today, the moving average will not be located in the same place tomorrow. Tomorrow being when? In the world of Forex, a new candle would open at 5 p.m. Eastern time where I live, right? In the New York area, it's 5 p.m. That's 8 hours from now. A new candle is going to open, and that's going to dramatically change the location of the moving average. So no matter where you put that order, excuse me, you would have to move it 8 hours from now. And so very good chance that moving average is going to be below 137 when the next candle opens. And the next candle opens 8 hours from now. So no matter where you are in this world, if you're listening live to this, count out 8 hours from now. That's when the next candle opens. You wouldn't necessarily have to move your order exactly 8 hours from now. Why? Because 8 hours from now is one of the quietest times of the day. It's a real quiet spot in the market. Maybe the quietest. Okay? So there's really very, very little activity for about a 2-hour stretch there. It's the period of time after the U.S. market closes, after the U.S. stock market closes, but before the sun comes up in Tokyo. There's about a 2-hour period of time there where the Forex market gets very quiet, the spreads get really wide, and there really isn't much activity. So you don't necessarily have to sit there and move that order at the exact moment when the new candle opens. Okay? Just be aware that once that new candle opens, within a few hours, you should move that order. Okay? Now, there's more than one way to place that trade. I don't have to use moving averages. I could use shorter time frames, like a 60-minute chart. Come on, pound yen. Okay, you see this rally on the 60-minute? When I see that sharp rally, I'm thinking, hey, maybe this is overbought, according to RSI. Now, it's not quite overbought, right? Overbought would be RSI of 70 or greater. We're currently at 58. So it's not really enough to get to overbought territory. But overbought would be like this. You see this right here where it turned red? That means overbought came above 70. Now, this was a while ago. The last time that pound yen gave an overbought reading was a couple weeks ago on the hourly. So it doesn't happen that often. Or it hasn't happened. It hasn't happened very often recently, I should say. It could happen very often at times. Now, you have oversold readings down here, but I'm going to ignore those. Why? Because we are in a downtrend. Back to the daily. Right? You look at the daily, and you look at the direction. We're clearly trending downward. Right? Just ignore this for a moment. Get rid of the RSI. Just look at the direction. Very clear direction, right? You could have a 5-year-old come into the room and ask them, hey, which way is this going? And they could tell you it's heading down from left to right, right? It's heading from the upper to the lower corner. It really is that simple. And if it takes more than a second or two to figure out the direction, then you might not have a very strong trend. You shouldn't trade trend if the trend isn't clear. To me, this trend is very clear. It's steadily moving lower and lower. We were at 144, 142, 140, 138, 136. We've been steadily moving lower for several months. If it takes more than a second or two to figure it out, then it's probably not a currency pair that you should use trending techniques, right? And there's more than one way to trade. You don't have to use trending techniques, but this is what we're talking about right now is a trending technique. So let's go back to the 60-minute. So what you're waiting for is RSI to come up to an overbought. Let's add an RSI, Relative Strength Index, 14 periods. And you can see a couple of them here. Here's the most recent one right here. We'll focus in on the most recent overbought. So when this turns red, it's overbought. That means relative strength index is above 70. That just means the current price is higher than 70% of the recent prices. That's how I would interpret it. When this turns red, that means the current price is higher than 70% of the recent prices. That's one way to look at it. And that doesn't mean it has to go down. Price can continue to rise until the current price is higher than 80% of the recent prices, and so on and so forth. That could certainly happen. But when this becomes overbought, that's your that's not your signal to sell. Your signal to sell occurs when it's no longer overbought, when it stops rising. So when this turns red, it's overbought. When it turns from red back to black, that's when it's time to sell. So the peak here is not the time to sell. It's really right about here, which is really right about here. I'll just steal this arrow. So you're not selling the absolute high. It's really right about here that you're selling. That looks like a pretty darn good place to sell in retrospect, right? That's a pretty darn good place to sell. And, your stop goes where? Your stop goes above this high. I would put it at least 10 pips above that high, probably more, but definitely at least 10 pips above the prior high. Same thing back here, right? You have this peak up here. It's not telling you to sell up here at this peak. You wait until that red turns back to black. Now there's a mixed signal here. It's going to turn red first here. That's going to give you a bad signal. That might give you a bad signal here. It's hard to tell. Let's see. Yeah, that might give you a sell signal right here, in which case you're probably going to get stopped out the first time. Okay, fair enough. But if you take the trade the second time, you're going to enter not here at the very top, but as it's coming off of that top, right about here, you're going to be entering with a stop above that high. So I read this as one loss and two winners, and potentially two big winners, although it's tough to say, but no big losers, because we never tolerate large losers, right? We always limit our losses. We don't necessarily limit our gains. Okay? Anyway, those are the type of situations that we're looking for. So there's more than one way to trade a trend. We're looking at using moving averages, and if the price does not come up to the moving average, we can also check shorter time frames for overbought RSI signals in the case of a downtrend. If it's an uptrend, we would be looking for oversold RSI signals. All right. Is it all making sense? Okay. Anyway, we're not getting that signal just yet right here. We know Aussie yen is in a downtrend. And again, this one is not cooperating in terms of coming up to the moving average. So, but, right, we did get a sell signal right here on RSI. Your stop would go at least 10 pips above this high. So did you get stopped out here? Well, again, at least 10 pips above this high is how high? The high there is 85. So the high here is 89. So this does not go 10 pips above this high. So this is a good trade. So if you, in other words, sitting around waiting for it to hit the moving average is all well and good. But if it doesn't come up and hit the moving average, it doesn't mean that there are no opportunities. Right? This opportunity occurred on Thursday. And it looks like this opportunity occurred early in the morning on Thursday. My time early in the morning. Looks like it occurred around the London Open. So yeah, I'm not awake for that one. But certainly somebody out there may have caught it, right? So there are opportunities out there. Even if they're not hitting the moving averages, there's still chances out there to make money. What else? There's Aussie yen. We said Euro yen. This one has not come to overbought anytime recently. There's one right here. This looks like a very nice one. Whoops. Sells right here. Stop is above this high, and you know that didn't get stopped out because the price still hasn't come up to that high. This thing has done nothing but drop ever since. Right? Dollar yen. So there are tons of opportunities out there, right? Okay. And look at this one. The most recent one here for dollar yen. It's right about here. That one, I don't know if this one worked or not. 1133, that one got stopped out. That one got stopped out right there. This one looks like it worked just fine, though. This one right here looks like it worked just fine. All right, let's go to British pound. So you've got to have a lot of tools in your arsenal, right? You've got to have, there's always got to be another way to place a trade. Because we can't just sit around waiting for one thing to happen. This is an intriguing chart. Bullish, I say. I mean, sometimes you just can't draw a parallel line. There we go. Ascending triangle. How do we want to play it? It doesn't look like we want to buy it right at this second, because it's right at the moment of truth, right here, where it should either break out or pull back. So it's like if we buy it right here, we're kind of betting on it. I'd rather buy the pullback. But where's the pullback? Where's the support? Let's go to a 60-minute. 125 is support. Look at this. Careful with this. I see this as a very... You can see there's support here, right? But when was that support formed? Is that support formed during a holiday? I'm skeptical as to the quality of this support. Like if support's formed over a holiday, I sort of mentally am questioning how many orders actually went into the creation of this support. Do you understand where I'm coming from here? Is it really legitimate support? Or did the market just kind of fizzle out right there? It's a legitimate question, right? On the other hand, we can legitimately say, I mean, we can say that this is certainly legitimate back here. This is resistance. This is support, although it's got an asterisk. The support has an asterisk next to it. I'd rather buy this at 125 than buy it now. Because if I buy it now, I'm buying it right at the point where it's going to fail if it fails. It's right at the breakout point. You understand that? Like this is a very rough, it's at a very rough spot right now. I'd rather buy it right here. Oh look back. You go back a little bit further. There's even resistance back here. So even though the activity right here is a little bit questionable, you can't really assail this back here or here. You can't really say anything bad about that. So 125 is my number. $125 is the number I want to pay. I'm willing to pay for British pound. Let's put that in green. this way, even if I failed, even if the breakout, if I get the pullback, even if I fail to break out to new highs, theoretically, I could still make some money. There's the opening bell for the New York Stock Exchange. So I could have a target in this area, like in 126 area. That's not a brand new high. We were just there last month. I could get out there. And I don't have to break new ground to get to that point. Just spitballing here. Again, I have no problem putting entries and targets on round numbers. I just don't want to put stops on round numbers. And if you look at the bigger picture, where's the big resistance? It's 127 if memory serves correctly. That's up here. See this? It's really 127.30. But I could be looking at 127 as another potential target. Or a little bit higher. I'm just trying to keep this really simple for now, because I know we're up against time here. Go back to the 60 where we started out. So this is a pretty broad trade. We're talking about 200 pip potential. Now, if I could have, that's a 3-to-1, and I could have my target 124.40. I could have my target under this rising line. That's appealing to me. The longer I'm in this trade, the farther my stop becomes under that rising trend line. It's a 60 pip stop. I have a 200 pip target. That's 3-to-1. Well, it's better than 3-to-1. And we'll throw a 1-to-1 target in there just for, continuity, because I love to, I like 1-to-1 targets just so I can move the stop. We'll close 1/3 of the trade at 1-to-1. So really just a quick back of the napkin setup. And again, these are not trade recommendations. I'm just drawing up setups, just showing you how my thought process works. As this line rises, my stop gets further and further under that line of that ascending triangle. My entry's right on the round number of 125. My stop's 124.40. I've got a 1-to-1 target of 125.60. That's my first target. My second target's 126 even, and my third target's 127 even, which puts it under the big resistance, which we've been under 127.30 really since early October. Okay. And that's just a quick back of the napkin setup for British pound. All right, gang. That's going to do it for today. I'm not sure if I'm not sure if I'm back either. It's either Tuesday or Wednesday. Please check the schedule. So I think we've got it's either tomorrow or Wednesday. Please check the schedule. I'll let you know. And I'll see you back again 2 more times this week. I do know that. Okay. Thank you again for listening. My name's Ed, and thanks again to FX Street. I'll see you again very soon. Take care.